It's Friday Coffee with your mortgage man, Eric. Woo! And today we're going to talk about one topic only, and that is the changes that we have seen in condominiums, condos. Now, look, I'm going to break it down for you in the individual types of loans that you can do with condos, FHA, VA, and conventional, right? That is probably 99%, 98% of the mortgage loans that are done in today's market. So, pretty simple. FHA has their own approved condo list, and it's very small. VA has its own approved condo list, a little bit bigger than FHA, but relatively small. Conventional. Here's where the changes have happened. So in conventional loans, so just to back up a bit, a little education, conventional loans, conforming conventional loans, what can you do with them? You can either do a Fannie Mae or Freddie Mac. They are the two GSEs, the two insurers that insure the conventional conforming loans. So as a lender, some lenders have an option to go Freddie or Fannie. And the reason why you pick one or the other is that they're, some of the guidelines for Freddie are more lenient versus Fannie, and vice versa on certain types of topics and loan programs. Okay, so now Freddie Mac we have been using for the last couple months exclusively for condos. Why is that? That's because Fannie Mae came out with a condo change months and months ago, and we knew that Freddie was going to follow suit. They usually do follow suit from one to the other, but sometimes there's a drag, and there was. And unfortunately, Freddie Mac has come out and announced their condo change as well. So what does all that mean? Well, again, break it down. When somebody wants to do a condo, there's extra paperwork. There are extra fees. There's extra headaches. There's extra moving parts. There's blanket insurance policies. So when you own a condominium, right, you have your insurance that covers the internal contents. It's much like a renter's policy. And then you have the insurance that covers the external content, the walls. So if it were to burn down, right, there's two different coverages that are taking place. The HOA fees cover the external policy, what we call the blanket policy over the entire complex. There's that. There's also the condo questionnaire form. Some people call it the condo cert, the HOA cert. They're all synonymous with one another. Then you can get deeper into the weeds. A full review or a limited review. And I'm taking the moment to explain this because, most consumers don't understand this, and respectfully so. I mean, you just want to do a condo transaction and a lender tells you that they can, and you assume that they can, and you assume that it's like a single family residence, but it's not. Some of the realtors understand that there's extra things going on behind the scenes. There's extra paperwork, extra potential headaches, especially if they've been caught in the middle of one of those headaches that have delayed closings. So understand that even prior to this recent change, condos could become a pain in the rear end because of several reasons. And regardless if it was a full review or a limited review, what makes a full review, what makes a limited review? A limited review means limited documentation. Full review means we need everything underneath the sun that they have, including a P&L, reserves, financial budget, etc., etc. And that costs money to get. So there's extra fees involved to the consumer to retrieve these items that, in essence, may turn the project sideways. Yeah, but Eric, there was a loan that was done in that community 2 months ago, so it has to be, you have to be fine. Well, look, I understand that mentality and the theory, but no. For example, is there litigation against the complex? Is somebody suing the complex? Why would they sue the complex? They tripped over a curb, broke their ankle, and are suing the complex. That has happened, believe it or not. the foundation was cracking in one of the units and the unit owner is suing the complex. That happens, believe it or not. So litigation, whoop, you're not getting any funding. Well, there wasn't any litigation 2 months ago. Well, it could be litigation today. Deficiency rates, vacancy rates, less than enough reserves, right? There are a number of things, believe it or not, that can throw this transaction sideways when it wasn't sideways 2 months ago. That's the nature of condos. Some people don't understand just how much it is to risk lending on a condominium. For example, it is much more of a defined path to lend on a manufactured home than it is a condo. That just is what it is. In a manufactured home, here's what we've got to do. Boom, boom, boom. We do it, you get the home. Condo, it's fluid. Like I said, it can change month to month. Anyhow, back to the changes. These are huge changes. You have to understand these changes. If you're remotely in this industry, if you're a lender and you have not explained these potential changes to your realtor partners yet, you're doing a disservice to them and all the buyers. Realtors, if you have not heard of this change, please understand this change is a grave change, okay? Buyers, understand that if you're looking to buy a condo, hang on. It was always a roller coaster ride, and now it's even more of a roller coaster ride. So here is what has happened. As a result of the condo complex collapse in Miami last year, I think we all heard about that. If you didn't, man, I don't know where you were. You're hiding underneath a rock or something, right? But all those people got killed, right, in Miami. It's a very sad thing, right, that happened in Miami with that condo collapsing. I mean, holy moly. Anyhow, as a result of that, Fannie Mae, Freddie Mac have put out temporary guideline changes. I don't know if that's going to be temporary. I bet it's going to be more, it's going to stick for the indefinite future, in my opinion. Anyhow, what does this mean? Well, you can Google it too if you don't believe me. Fannie Mae, this isn't just our company. Oh, I haven't heard about it from my other lenders. Well, then I'm sorry, but your other lenders aren't doing yourself justice here. Google it. It's all over the place. Ironically, I saw the first article in the news yesterday about this. And look, this has been coming for months. And that's just how the news is, right? When the news says rates are going down, no, they're probably going up because that was a month ago. That's just how the media is with the mortgage industry. Anyhow, so if what they're looking for is deferred maintenance, if there is exceedingly abundance of deferred maintenance, and we find that out on the condo questionnaire form, and there's issues with the structural integrity at all, it throws this thing sideways and possibly cannot be done. Now look, this is such a new change that there are very few people that have gone through the gauntlet yet and have come out the other end on, well, this is exactly what you can see, you can expect this, and this is how you're going to remedy the issue. That is how new that it is. So when I say to you as a buyer or a realtor, a buyer that wants to buy a condominium, and I tell you as a realtor, hey man, you might want to give us some extra time, 40, 45 days. Look, it's not because we can't underwrite. Like, our underwriting turn times are 24 hours, right? I'm just trying to give you a heads up, a warning that there's going to be extra paperwork. We might run into a snafu. Now, look, if we can close earlier, let's close earlier. Put on the contract on or before. Some brokerages don't like that, so it's fine. But maybe we can come back later and bump up the move of closing. But we all have to be on the same page on what has happened with condominiums. There are now extra things, extra questions, extra slots, graphs, boxes that the condo complex management company has to fill in now. That can throw up other questions, open Pandora's box, make us ask for other documentation. And they now are having the appraiser make comment on the same thing. So now not only do you have the lender asking for these additional things, But now you have the appraiser having to ask for these additional things and put these comments on the appraisal. So we have all these extra potential things that can go sideways. I'm hearing things like, well, if there is any deferred maintenance, now you may have to get an engineering inspection to the property for the structural integrity. Well, my goodness gracious. Where do we get it? Who do we call to get one? How much does it cost? Who's going to pay for it? Back to the negotiating table. Seller pays for it. Buyer, seller, do they split it? Right? I mean, all of these things have yet to take place. And that's why I'm saying, what used to be more paperwork and a headache in the condo land is now you've added to it. So that's all I'm saying is heads up. We don't know how this is going to roll out. Maybe it's not as drastic of an impact as we think, or maybe it's twice as much as what we thought. Because the article yesterday read something like this: Fannie Mae, Freddie Mac torpedo the chances for homeowners to finance condos. Right? Yeah, torpedo, right? So you already see where the media is going with this. So just a heads up. Condos, man, let's check back in, right? 30, 60 days from now. Let's kind of see how this is starting to unravel. We probably have a couple that have gone through the gauntlet at that point. Probably have some more information for you. Very, very important change for sellers, for buyers, for realtors, for lenders, anyone regarding condominiums, man. Want some more information? Want to talk about it deeper? Reach out to me, 602-757-2171. It's Friday Coffee with your mortgage man, Eric. See you.